Welcome back to another episode. Today we're tackling an important topic for anyone running a dropshipping business in Australia: taxes and regulations. It's not the most exciting part of the business, but it's absolutely crucial. Getting it wrong can lead to fines, penalties, and a whole lot of unnecessary stress. Before we dive in, just a quick disclaimer: this is general advice only, and we strongly recommend speaking to a qualified accountant before making any decisions about your business. Let's start with the goods and services tax, GST. If your annual turnover is $75,000 or more, you're required to register for GST and charge an extra 10% on your sales. This means adjusting your pricing strategy and keeping proper records to ensure you're collecting and reporting GST correctly. If you're just starting out and not hitting that threshold yet, you don't need to worry about it, but it's something to plan for as your business grows. Next, let's talk about customs duties. If you're importing products into Australia, you may need to pay duties depending on the product type and value. These extra costs can impact your profit margins, so it's worth checking the Australian Border Force tariff classification system to see what applies to your products. Some suppliers offer duty included pricing, while others don't, so always confirm before committing. Now, before you even start selling, you need to register your business properly. First, decide on your business structure, whether you're a sole trader, partnership, company, or trust. Then register your business name with ASIC and get an Australian business number, or ABN. If you meet the GST threshold, you'll also need to register with the Australian Taxation Office. And depending on what you're selling, certain permits or licenses might be required, so check your local government's regulations to avoid any surprises. Once your business is up and running, record keeping is a must. Keep track of all your income and expenses, issue tax invoices for GST sales, and file your business activity statements, also known as BAS, on time. This keeps you in good standing with the ATO and makes tax season way less stressful. Managing cash flow is another key piece of the puzzle. Taxes and duties can sneak up on you, so it's smart to set aside funds regularly rather than scrambling when payments are due. Many dropshippers use accounting software or hire a bookkeeper to stay on top of finances, which can save a lot of headaches down the road. Now, what happens if you don't stay compliant? The consequences aren't pretty. Late filings can lead to fines, penalties, and even interest on unpaid tax debts. In serious cases, legal action could be taken, which could put your entire business at risk. It's always better to stay ahead of your obligations rather than dealing with the fallout later. So how do you keep up with changes in tax laws? The best way is to use reliable resources like the ATO, ASIC, and ABF websites. Joining industry forums and staying connected with professional advisors can also help. If you're serious about scaling your business, working with an accountant who understands e-commerce can be a game changer. Now, let's talk about the benefits of staying compliant. Besides avoiding penalties, it actually helps build trust with suppliers, payment processors, and even customers. A well-structured, legally sound business also opens up opportunities for grants, loans, and other government support programs. Plus, if you ever decide to sell your business down the line, having everything in order makes the process much smoother. At the end of the day, tax compliance isn't just about following rules, it's about creating a solid foundation for growth. While this episode gives you a solid starting point, always seek professional advice if you're unsure about anything. Having an expert in your corner can save you money and prevent costly mistakes. That's it for today's episode. Thanks for listening, and I'll catch you in the next one.